Our Black Friday sale is now available on the website for the remainder of the month. This will apply on the ebook, course and mentorship plans. Private message me on Twitter, links down below for more information, or head straight to the website. Welcome back everyone to another Injective update. In yesterday's video, we were suggesting a potential inverse head and shoulders pattern with a 25% target up at $20. Now, of course, the target is just at $20. However, our previous all-time high is 27. And as I also mentioned, as we zoomed out over here, that this key level of support within that range of $13.81 is the 786 fib. And as that's confirmed as support with the 200 EMA lying beneath it, we would say we need to break the golden pocket, which we've now done so today, which was the neckline of the inverse head and shoulders pattern, to actually send Injective back to its previous all-time high, $27. So yes, the target out of the pattern is $20. However, this is starting the journey out of this range, so we can see a new high, which would then eventually, after some time, take us to $27. It's nice to see that we were able to give you this pattern in yesterday's update totally for free. We were saying that as long as the moving averages can hold as support as we formed a bullish cross, we should see upside beyond this golden pocket. But until those very moments, there are of course risks that the bears are still in power, because again, this resistance is meant to send you to new lows below that lower 786, which was on the higher time frame over here. But of course, as the 200 EMA is above that point, even if we lost this bullish cross, this would serve as your bottom of this uptrend. We can see as we zoom out again, it is above that lowest point over there of the range, above the 786 fib. So essentially, by carrying on above this point, we should eventually see that one fib level, which was the $27, simply because the lowest level of support of this uptrend is now above that 786 fib over here. We can clearly see that. So essentially, if we continue to hold above this 200 EMA, we should see $27, $64, $100, $200 and beyond. So yeah, very exciting times. If you haven't already, please make sure you like, subscribe, comment and share, and remember that today is the last day of my Black Friday offers, and so use the links down below to take action on the website or ask more questions on my Twitter. So essentially, we were waiting for a breakout of this neckline to validate this pattern and essentially give us that green light for an eventual pump to $27. And I made a little Twitter update for you guys today earlier, so make sure you're following me there. Again, a place where you can ask me further questions about my education. It's Louis_crypto, but I please recommend you to use the links underneath this video, as there are scam accounts out there. So I also did link yesterday's update to this post where we first mentioned this inverse head and shoulders pattern. And so now that we broke the neckline, which was also the golden pocket, so a confluence, the fact that there's two key levels over here, the golden pocket and the neckline of the pattern. And so by breaking that, you're essentially not only validating the pattern to $20, you're actually creating the reversal wave, which would actually mean we should see $22 and beyond. And so now if we go over to the live chart, I'm going to show you what the targets are beyond $22. Now we know we're on our way to $27, so of course, jump from 22, we're going to 27. However, there might be a few levels before that point, and $25 over here is a huge psychological level. So what I will do is go to the daily and 5-day time frame to see if there are any body candle closes in the past at this price point. So let's go to the daily right now and see if at $25 we can see some body candle closes in the past. So $25, let's look in this area. So as you can see, the wicks are what created the all-time high. But what is this body right over here? This is $22, which is our 1618 target, I believe. Let's just double check that. Yes, so that is actually going to be a key level of resistance. $22, $23, okay? Not even 25, because the highest body candle close on the daily time frame is at $22, $23. Now I'll go to the 5-day and look at that area as well to see where the highest body candle close was, and it is again $21 to $23 over there. So we know that, okay, essentially when we do meet this inverse head and shoulders target, now that it is valid, first of all we need to make sure we stay above the neckline and the golden pocket to keep the reversal wave intact, as well as the target out of the pattern intact. So going forward, we need to see $17.20 continuing to hold as support. Now we're nowhere near that point, but if we do see a dump back down, that's what needs to hold support. We've also got more confluences other than the golden pocket and the neckline. We've also got the 4-hour 20 moving average acting as support, and we know that as long as we are continuing to hold it as support, as we've seen over here, we eventually continue higher. Yes, you can have your moments where you lose it, but if you reclaim it and confirm it as support, we should just continue in an uptrend. These are some great examples where you lost it, but this acts as a second layer of defense, we can say. It reclaimed the 20 and we continue upwards. It had a loss of it, but after the reclaim, we set new highs. So essentially, by bringing itself back up into this resistance where the bears are actually in power, as long as we can maintain the shorter term moving averages, what are their suggestions? Okay, if we're holding the 20, we're going up in the immediate short term. So on the 4-hour time frame, over the next 4-hour periods, we should be going up. And so that's what's given in. And now we've created the reversal wave, continue to hold about above that to meet this $20 target. But as we've scaled up on the higher time frames, on the daily and the 5-day, we saw that the highest candle closes at the previous all-time high of $27. That high was just a wick, and the body candle closes were between $21 and this is pretty much $23, guys. Can you see it? $22.98. So I'm just going to call it 23, and this is $21.62, but I'm going to call it $21.50. So our range high of this our highest body candle closes in the past, going off the data, is between $21.50 and $23. So it could be that we could pump up a little bit higher than our technical target out of the inverse head and shoulders, but it will be between this area where we might find a short-term top, where we come back down 4 key levels, and as long as the golden pocket is continuously being maintained, then eventually we should see further upside back to our previous all-time high, $27. Thank you guys so much for listening to me today. I'm just sharing my views of the market. Just use me as a messenger. Don't shoot me. I'm just basically suggesting what I'm seeing, and these are the moves that I'm personally taking. I am a holder of Injective, of course. And that's pretty much it from me today. Don't forget to like, subscribe, comment, share, and support the channel. I am really grateful if you can do so. We're on the verge of hitting 7.5k subs before the end of this year. It's definitely possible. So make sure you can share these updates. And again, last day of my discounts on the education that I offer. Use the links down below so you don't get scammed. Head straight to the website or to the Twitter for more information. Our Black Friday sale is now available on the website for the remainder of the month. This will apply on the ebook, course, and mentorship plans. Private message me on Twitter, links down below for more information, or head straight to the website. Cheers, everyone.